The financial world is evolving rapidly, and digital currencies are at the center of this transformation. As people seek faster, more secure, and cost-effective payment methods, digital currencies offer an alternative that could eventually replace credit cards. From lower transaction fees to enhanced security and global accessibility, the benefits are significant. This article explores how digital currencies are reshaping the future of credit, the challenges they pose, and what this shift could mean for consumers and businesses. In this video, we'll talk about exploring the future of credit, how digital currencies could replace credit cards, so make sure to watch the full video. 1. The evolution of credit, from cash to digital transactions. The concept of credit has evolved significantly from barter systems to paper money and then to plastic credit cards. Over the decades, credit cards have become the dominant payment method, offering convenience and flexibility. However, they come with high fees, interest rates, and fraud risks. The rise of digital currencies presents an opportunity to eliminate these issues by providing a decentralized and transparent payment system. Unlike credit cards, cryptocurrencies operate on blockchain technology, reducing dependency on banks and intermediaries. This shift could redefine how people borrow, lend, and spend money in the digital age. 2. How digital currencies work compared to credit cards. Credit cards operate through a centralized banking system, where transactions require approval from banks or financial institutions. This process often involves delays, high processing fees, and potential fraud risks. In contrast, digital currencies use blockchain networks to process transactions directly between users, reducing the need for intermediaries. Cryptocurrencies enable instant payments, lower transaction costs, and increase security through encryption and decentralized ledgers. With smart contracts, digital currencies can also automate payments and reduce disputes. As consumers seek more efficient and secure payment solutions, digital currencies are emerging as a strong alternative to traditional credit card payments. 3. The role of blockchain in secure and transparent transactions. One of the biggest advantages of digital currencies over credit cards is blockchain technology. Blockchain ensures every transaction is securely recorded on a public ledger, reducing the risk of fraud and chargebacks. Unlike credit card transactions, which can be reverse manipulated, blockchain transactions are immutable and cannot be altered. This transparency enhances trust between buyers and sellers while reducing financial fraud. Additionally, blockchain eliminates the need for credit card processing companies, reducing costs and improving transaction efficiency. As security and privacy concerns grow, blockchain's ability to offer fraud-resistant transactions makes it a strong competitor to traditional credit systems. 4. Lower transaction fees. A game changer for consumers and merchants. Credit card companies charge merchants high processing fees, often ranging from 2% to 4% per transaction. These fees are passed on to consumers in the form of higher prices. Digital currencies, on the other hand, significantly reduce transaction costs by eliminating intermediaries. Cryptocurrency transactions typically have minimal fees, making them a more attractive option for businesses and consumers alike. This cost efficiency could encourage more retailers to accept digital currencies, leading to widespread adoption. As businesses look for ways to maximize profits while providing better payment options, the low-cost nature of cryptocurrencies presents a compelling alternative. 5. Digital wallets, the future of financial management. Unlike traditional credit cards, which require physical cards and banking relationships, digital currencies can be stored in digital wallets. These wallets offer greater flexibility, allowing users to manage multiple cryptocurrencies, make payments instantly, and access funds globally. With the rise of mobile payments, digital wallets are becoming a mainstream financial tool, offering seamless integration with e-commerce and point-of-sale systems. Some digital wallets even support lending and earning interest on crypto holdings, further reducing reliance on banks. As digital wallets continue to improve in security and ease of use, they could become the new standard for financial transactions. 6. The rise of central bank digital currencies, CBDCs, and their impact. Governments and central banks worldwide are exploring central bank digital currencies, CBDCs, as a response to the growing popularity of cryptocurrencies. CBDCs are digital versions of traditional currencies, offering the benefits of blockchain while maintaining government oversight. Unlike decentralized cryptocurrencies like Bitcoin, CBDCs provide stability and regulatory control, making them more appealing to mainstream users. If widely adopted, CBDCs could replace credit cards by offering a secure, state-backed digital payment system. With instant transactions and no reliance on third-party credit providers, CBDCs could revolutionize the financial industry and reshape how consumers access credit. 7. The challenge of mass adoption and consumer trust. Despite the advantages of digital currencies, mass adoption remains a challenge. Many consumers still trust traditional banking systems and are hesitant to switch to cryptocurrencies due to volatility and regulatory uncertainty. Additionally, the lack of widespread acceptance by merchants limits the usability of digital currencies for everyday purchases. Governments and financial institutions must work towards creating regulatory frameworks that promote the safe adoption of digital currencies. Education and awareness campaigns will also play a crucial role in increasing consumer confidence. Overcoming these barriers is essential for digital currencies to replace credit cards on a large scale. 8. Cryptocurrency credit. How digital lending is changing finance. One of the key benefits of credit cards is access to credit, allowing users to borrow money and pay later. Cryptocurrencies are now introducing similar lending systems through decentralized finance (DeFi) platforms. Crypto lending allows users to borrow funds without traditional banks, using digital assets as collateral. This system offers lower interest rates, no credit checks, and instant approvals. By removing the reliance on banks, crypto lending democratizes access to credit, making financial services more inclusive. As DeFi continues to grow, cryptocurrency-based credit could become a mainstream alternative to traditional credit card borrowing. 9. Regulatory challenges and the future of digital credit. As digital currencies gain popularity, governments and financial institutions are struggling to regulate them. While some countries embrace cryptocurrencies, others impose strict regulations or outright bans. The lack of a global regulatory framework creates uncertainty for consumers and businesses. If digital currencies are to replace credit cards, clear regulations must be established to protect users and prevent illegal activities. Governments will need to balance innovation with consumer protection, ensuring that digital finance remains secure and accessible. As regulations evolve, they will shape the future of digital credit and determine its role in mainstream finance. 10. Will credit cards become obsolete in a digital economy? With digital currencies offering faster, cheaper, and more secure transactions, the question arises, will credit cards become obsolete? While traditional credit cards still dominate the financial industry, their limitations are becoming more evident. As more merchants accept digital payments and blockchain technology improves, credit cards may gradually lose relevance. The transition will depend on technological advancements, regulatory developments, and consumer adoption. However, one thing is clear, digital currencies are reshaping the financial landscape, and the era of traditional credit may soon come to an end. Those who adapt early will have the advantage of this financial revolution. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.